All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Wednesday, everybody. Today's April 23rd, 2025. And the top story this morning is the cooling rhetoric in the trade war. Markets are up sharply once again. The rally that started yesterday is continuing. It's actually accelerating to the upside. We've actually had some rather nice things have been said. It's like everybody decided, okay, you know what? Maybe, just maybe, we took things a little bit too far. See also the 3,400% tariffs on solar panels that we talked about yesterday. Yeah, maybe we took it just a little too far. Or as, the anchorman would say, well, boy, that escalated quickly. Yeah, I mean, Donald Trump was reaching for the trident for a second there. Might want to lay low for a while. All right, this morning, they're chilling out a little bit. Started yesterday. Secretary Bessent had a closed-door meeting with some representatives of the big banks. Why? Because they're representatives of the big banks and they get closed-door meetings, and you and I don't. So we do not hear about these things until after they've already happened, until after the banks have secured favorable positions for themselves. Then we hear about this good news. That's what happened yesterday. Oh, that's nice. So the meeting started. Yesterday, it was sometime around 9 a.m. Eastern time. I don't know the exact time this meeting was held, but Secretary Bessent basically said, look, guys, these 145% tariffs, they're obviously not going to be here forever. We are going to start talking. When we talk, they're going to come down. The market saw that as a step back from the brink. I agree. That was a step back from the brink. President Trump has followed that up with some additional rhetoric saying basically he's going to be nice, which, yeah, okay, that's a refreshing change of pace. Let's be honest, there has been somewhat of a conduct unbecoming trend in Washington, D.C., as far as things that have been said and, how the tones we use. Not exactly a page out of the diplomat's playbook. All right, now look, that's Trump's personal brand. That's his style. That's what people voted for. That's what they're getting. No surprises there. But we are seeing a very substantial step back in that rhetoric here. China has also indicated a willingness to talk while also putting some of their typical Chinese bluster in the statements about fight to the end and all that stuff. Okay, that's adorable. Look, guys, they're still kind of like puffing up their chest and, doing their silly dance, but they're pretending now, or they are signaling to one another a willingness to talk. Neither side wants to be the one to pick up the phone because that will be viewed as a sign of weakness and they'll automatically be starting the negotiations with a point down. So, we might be kind of settling in for the long haul here. I don't expect any major breakthroughs like the trade war is over, peace has prevailed. I don't think that's going to happen. But we very likely could see something like President Trump comes out and says China has signaled a willingness to negotiate, and therefore the 145% tariffs are going back to the 56% that we said on Liberation Day. Or maybe he'll take them all the way down to that 10% base level that he gave everybody else and say, as long as we're talking, we're going to keep 10%, but we'll put him back to 145 if negotiations don't go well. We could get an announcement like that any minute now. And, of course, the markets will rip on that news. Or we could get that announcement, and then 30 seconds later, he could say Xi Jinping is Mr. Poopy Pants and I hate China, and the market could crash on that. Volatility is kind of the thing lately here. And this rhetoric swings wildly from minute to minute. As I said during a lot of my streams last week, by the time you hear about the news, even if it's only a few minutes old, it's already old news. Just be careful on margin, guys. A lot of people took out leverage shorts on this market thinking these 1,000-point Dow days were going to last forever. Did not happen. Even some of the rhetoric against Chair Powell has eased off. President Trump is out today saying he never said he wanted to fire Powell after saying several times he wanted to fire Powell. But okay, even that, he's stepping back from the brink here. And, honestly, I've seen such a change in the rhetoric in the last day. It's almost as significant as we got on April 10th when they walked back the tariffs and set them back to 10% for everybody. Now, that was the bond market that made that big swing possible. What happened yesterday? Was there some ruction in the bond market that caused this sudden chilling of the rhetoric? Maybe it was that little Forex firm that blew up yesterday that we were talking about at the end of the stream. What was it, Argentex? Maybe there was something going on with Forex swaps, and that's what freaked everybody out and caused everybody to suddenly chill out. I don't know what it was, but a notable shift in the rhetoric. The markets are loving it, ripping higher today across the board. We also got earnings from Tesla yesterday, and they were awful, as expected, but they were awfuler than expected. Nobody was expecting good earnings from Tesla. Nobody got good earnings from Tesla. The earnings we got were a lot worse than we thought they were going to be, and yet Tesla stock is ripping today. Obviously, this good news in the trade war is contributing here. Maybe there was a little too much negativity priced into Tesla stock. I don't know. Molotov cocktails being chucked at the things is kind of bearish. That being said, Elon Musk signaled that he may be stepping back from his government involvement. Maybe him and Doge going to take a little bit of a break, focus on the company that he's running. Tesla shareholders really like that news. And of course, they had their typical statements about humanoid robots and autonomous vehicles and time travel and all that other good stuff that they're going to invent. And so Tesla stock ripping higher here this morning. Apple and Meta have both been hit with some what's being described as modest fines. It's almost $750 million. Modest fines from the EU in their latest cash grab against big tech. Probably another salvo in the trade war there. It's just like once a month, Europe gets together and decides we're going to take $1 billion from Silicon Valley. And look, I don't really like Silicon Valley. I'm no big champion of big tech. You guys know my criticisms of big tech pretty much. No need to restate those here. I also don't like the European Union very much in the way they do business. And this absolutely is just another silly cash grab from them. How long are we going to just kind of sit back and while they do that? I don't know. Let's throw another 50% tariffs on Europe while we're at it. Why not? The numbers don't really matter anymore. Boeing earnings came out. They were better than expected on slower cash burn. So some more indication maybe that the worst news for Boeing is behind us. Knock on wood. Also important with those Boeing earnings, no impact from tariffs yet. That was for the quarter ended in March, and Boeing said there might be some more tariff stories coming. We had some planes that were bound for China, had to turn around pretty much mid-flight. Maybe India is going to buy those, maybe not. at&t earnings were pretty good. They took a lot of subs from Verizon. We saw that yesterday. Verizon lost some 250,000 subscribers. at&t is the one that got them. at&t is one of your more affordable mobile carriers, and so people are saving money. Why? Because the economy sucks. It was never as good as the press made it out to be, and now people are switching to at&t to save money. We had a big drop in mortgage applications on higher interest rate demand. Things in the housing market keep getting worse. We got some big announcements are coming from Intel and ConocoPhillips. Double-digit thousands of layoffs coming from those two big ones. That's interesting. Intel's supposed to be building great, big, beautiful chip factories to hire Americans. Seems they're laying them off first. And ConocoPhillips cutting people. That's an indicator that the oil patch is batting down the hatches, getting ready for an oil price war with the Saudis, or maybe just a big slowdown in global demand. But as those crude prices head lower, plans for drilling are being scaled back. And we got a little treat for you at the end of the show today. For you fans of the World Economic Forum, we got a rather hilarious story to talk about here. Klaus, you've been a bad boy, Klaus. You got some splaining to do. Stick around to the end. I think some of you guys might enjoy that one. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning. Don't forget that like button and the subscribe button if you're new here for the YouTube algorithm. We do this one every day, so come on back and have your coffee with the Melonheads tomorrow. The S&P 500 is up 127 points, 2.4%. That is after a pretty good day yesterday, continuing to rally here this morning. The Dow is up 750 points ahead of the open. That's after rallying more than 1,000 points yesterday, 1.9% higher. The market is loving this new, more polite White House and everybody playing so nice in the sandbox. The NASDAQ is higher by 2.88%, 520 points to the upside for the NASDAQ. Stocks are up across the board here. Meanwhile, the U.S. dollar is stronger this morning. It's back above 99. It had a pretty good strengthening yesterday. Right now, we're 12 basis points higher at 99.10. Now, let's talk a little bit about the dollar. We have got the USD JPY chart. It's currently at 141.83. So we're better than we were yesterday on the yen. It's a little weaker. Remember, this chart moving higher is the yen getting weaker. This chart moving lower is the yen strengthening. But something interesting here, guys, just looking at the minute candles here. I don't know what happened at 7:10 a.m. this morning. Right about here, the yen suddenly decided that, okay, we had weakened enough and it started to head lower. I really don't know what that was. But right now at about 141.8, it's not like we're out of the woods here going back to daily candles. We're definitely not out of the woods when it comes to the yen chart. Jeez. Sorry, my chart is misbehaving. Anyways, the worst appears to be behind us for now. That's what I'm trying to say here, guys. That being said, the big wick on this candle down here, that's noteworthy. We could be about to resume lower. Looking over at the bond market this morning, we've got yields sharply lower. Look at this. The bond market is loving this nice rhetoric coming out of D.C. and everybody playing nice. The 30-year Treasury, 14 basis points lower, 4.736. Remember, guys, lower yields equals higher prices. People are buying back those long-end U.S. Treasuries this morning on this encouraging news that maybe the trade war might be cooling off a little bit. The 10-year Treasury, 4.284. That is lower by 10 basis points. The 2-year, 3.797. That's really unchanged, only about 1 point here. It's mostly the long end of the yield curve that's moving. And the 1 month is at 4.279. That is lower by about a half a point. Looking over at commodities here, we have gold is not liking this good rhetoric in the trade war here. Although gold was, let's be honest, guys, gold was due for a break here, wasn't it? Currently down $74 for spot gold, $3,307. That's after briefly touching $3,500 about 24 hours ago. Meanwhile, we've got the June gold futures. They are lower by $100 here. So gold giving back some of those gains, but still well above the, say, 200-day moving average. Meanwhile, spot silver actually looking pretty good this morning, $32.81. That's higher by about 30 cents here, or 0.9%. So we've got that gold to silver ratio is closing a little bit, heading back towards that 100 level, maybe around 101 right now. We went as high as about 106 at some point yesterday. So silver's outperforming gold here. It's been due for a while. Good to see that happening. Copper, meanwhile, is about 0.25% higher. Platinum is higher by 1.1%. Palladium is down by about 0.75%. And WTI crude is about 0.5% lower here, $63.32. Let's talk about WTI crude, please. ConocoPhillips plans layoffs as part of a broad restructuring here. That cheaper oil is not good for the drillers here. ConocoPhillips, a top U.S. oil and gas producer, plans to cut staff, the company said on Tuesday, amid a broad push to rein in costs and streamline operations after its $23 billion buyout of rival Marathon Oil. The job cuts are the latest sign of pain in the oil and gas industry, which is facing higher costs and lower revenues as prices hover around $63 a barrel. Many companies say they cannot drill profitably if oil prices fall under $65 a barrel. So Conoco batten down the hatches here. They're cutting people. Did they give us a number for the layoffs? They didn't here. But guys, it's a good bet. We're looking at pretty sizable layoffs, probably in the double-digit thousands here. Look, the Saudis are about to start pumping more oil. OPEC Plus agreed they were going to raise production faster than anticipated. They had been holding back production since COVID. That's going away now, so more supply going to hit the market, right as there's worries about global demand and the trade war. Conoco sees lower prices coming, and so they are getting ready to reduce their costs ahead of that. Meanwhile, Bitcoin is ripping again this morning, $94,039 for Bitcoin. That's higher by another $500. We were actually over 95,000 at one point this morning here. Things are looking pretty good for Bitcoin. Now, I drew this red horizontal line just because of the technicals. Now, we talked about how we were kind of skirting up the 200-day moving average. Then we broke down from that, and then we were toying around with the 50-day moving average for a couple of days. We broke out above that. Now we're kind of at this red line. Now, going all the way back to November of last year, you can see there was a couple of times where we bounced off of this red line. There was support at this line. That's about 92,000. And then we lost that level back in February when we broke down. We failed the retest of it, and that typically happens where support turns into resistance. Now here we are just above that level here, retesting that resistance. So this is kind of a significant technical move in Bitcoin here. Watch that level around 92,500. If that holds, and if this optimism continues, maybe Bitcoin heading back over 100, maybe even to new highs again. And guys, I would just point out, during the last halving cycle, the last time we had that crash, we had a significant pullback in Bitcoin, right? We hit that high. That was, what was that, in around March of 2021, April 2021. Then Bitcoin sold off over 50% before rallying again to make another all-time high close to 70,000. That is before FTX and the onset of crypto winter. So I wonder, are we looking at another setup here? Could we see one more new all-time high in Bitcoin before somebody blows up and crypto crashes, as it usually does within about 18 months of a halving, which puts us somewhere around September or October of this year? All right, let's talk about this one. This is the softening rhetoric and how it started. Bessent expects tariff standoff with China to de-escalate. And it started with Scott Bessent, who is quickly emerging as kind of like the eyes, ears, and voice of Wall Street within the Trump administration. When Bessent gets his way, the market rallies. When Bessent doesn't get his way, the market sells off. It's kind of like the Bessent indicator here. U.S. Treasury Scott Bessent told a closed-door investor summit on Tuesday that the tariff standoff with China cannot be sustained by both sides and that the world's two largest economies will have to find ways to de-escalate. I couldn't help but notice that closed door. How does one get on the right side of that closed door, I wonder? Is it expensive? Do you need to buy tickets? Do you need to make a donation to somebody? A lot of people very correctly zeroed in on that closed door meeting saying, WTF, why not just hold a press conference and give everybody that valuable information at the same time? But remember, guys, Bessent, he's kind of one of they, isn't he, with a capital T? That de-escalation will come in the very near future, Bessent said, during an event hosted by JP Morgan Chase in Washington, which wasn't open to the public or the media. WTF, Secretary Bessent, you're a freaking government official, not an agent of the banks anymore. You should not be giving out that kind of information at closed-door meetings that are not open to the public or the media. But I digress. He characterized the current situation as essentially a trade embargo, according to people who attended the session. Bessent said that it was not the U.S.'s goal to decouple from China and that the current status quo of 145% tariffs on Chinese goods by the U.S. and 125% tariffs on U.S. products by China was not sustainable. You think? He expressed optimism that tensions could cool in the coming months, which would bring relief to markets, but cautioned that a larger deal could take longer. Now, there's some important things in that sentence there. He's cautiously optimistic. Okay, great. Tensions could cool in the coming months. Months, not days. All right? I'm seeing a lot of breakdown in the logistics world. Things are very bad at the ports in China and in the U.S. right now. And if we're looking at tensions cooling in the coming months, that means that pain that's happening at the ports will arrive on Main Street before they make a deal. That's important. He cautioned a larger deal could take longer. Guys, trade wars don't end in 5-6 trading sessions. Trade wars last months, if not years. So maybe some of this optimism getting a little ahead of itself here, just maybe. But President Trump, asked about Bessent's comments later on Tuesday, said the U.S. was doing fine with Beijing and that he did not anticipate a hardball negotiation. Dude, you got 145% tariffs on their stuff. What do you mean you don't anticipate a hardball negotiation? After clubbing a man in the face with a baseball bat, the president quickly said he was not going to play hardball. Okay, that's great. Trump pledged to be very good to China. Oh, he's going to be very good to China. Oh, I'm sure the Chinese appreciate that. The final tariff on China, Trump predicted, would not be anywhere near the 145% level he has set. We're going to be very nice, Trump said. They're going to be very nice, and we'll see what happens. But ultimately, they have to make a deal because otherwise they're not going to be able to deal in the United States. So, that's a pretty seismic shift in the rhetoric, right? I mean, him saying, we're going to be very nice. They're going to be very nice. We're going to have a deal. It's going to be a great deal. You're going to love my deal. Okay, the market liked it anyway. The market sure as heck liked it. And China seemed to like it. because we've now got some overtures from China. China signals an openness to U.S. trade talks, but not under duress, just this morning in the Wall Street Journal. Beijing, China signaled it was open to trade talks with the U.S. a day after President Trump said he was willing to cut tariffs on Chinese goods, though Beijing warned it wouldn't negotiate under continued threats from the White House. China's attitude toward the tariff war launched by the U.S. is quite clear. We don't want to fight, but we are not afraid of it. If we fight, we will fight to the end. If we talk, the door is wide open. Foreign Ministry spokesperson Guo Jiakun said at a daily press briefing on Wednesday, while Chinese officials have used similar wording previously in discussing the possibility of trade negotiations with Trump, taken together, the latest comments from Beijing and Washington appear to be part of efforts to seek an off-ramp from the recent spiral of tensions. All right, at the very least, we are no longer escalating. And Trump says he has no intention of firing Fed Chief Powell after pretty much saying he intended to fire Fed Chief Powell. Another reversal in the rhetoric this morning. President Donald Trump said he had no intention of firing Federal Reserve Chair Jerome Powell, despite his frustration with the central bank not moving more quickly to slash interest rates. Never did, Trump told reporters on Tuesday. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his ideas to lower interest rates. And again, guys, a day ago, we were holding up Truth Social posts that called him too late Jerome and big loser, always wrong Jerome, or whatever, the typical language he uses. And today it's, I'd like to see him a little more active in terms of his idea to lower interest rates. Okay. Trump's National Economic Council Director Kevin Hassett on Friday had told reporters that Trump was studying the question of whether he's able to fire Powell after a series of presidential social media posts and public comments criticizing the Fed. So guys, just a complete 180 from where we were a few days ago, both in the Fed rhetoric and the China rhetoric back and forth. So this is where this optimism is coming from. And that optimism is spilling over to Tesla earnings as well. Tesla reports a 20% drop in automotive revenue in Q1 of 2025. Guys, these numbers from Tesla, they were terrible. Absolutely terrible. Tesla has reported a 20% decline in first quarter revenue 2025 that ended on March 31st. Total automotive revenues were posted at $13.97 billion compared to $17.38 billion in the same period a year ago. Net income attributable to common stockholders decreased sharply by 71% to $409 million, down from $1.39 billion, while non-GAAP net income was $934 million, a 39% decline. Look at that number there, a 71% drop in net income. We knew Tesla's numbers were going to be bad, but nobody thought they were going to be that bad. Overall, Tesla's total revenues fell by 9% to $19.33 billion in the first quarter of 25. That's down from $21.3 billion in the prior year. While we are making prudent investments that will set up both our vehicle and energy businesses for growth, the rate of growth this year will depend on a variety of factors, including the rate of acceleration of our autonomy efforts, production ramp at our factories, and the broader macroeconomic environment, not to mention our CEO's politics. We will revisit our 2025 guidance in our Q2 update. So Tesla's kind of saying what we've seen from some other companies. We're going to adopt a wait-and-see approach on the tariff impact before we lower our guidance. Why? We'd like to give our executives a little more time to sell stock before we crash the price by lowering our guidance. My words, not theirs. Tesla is planning to commence production of new vehicles, including more affordable models, in the first half of 2025. The company's global sales fell by 13% year over year to 336,681 units in the first quarter. That includes a 9% drop in U.S. sales to 128,100 units. Guys, these numbers were really, really bad. But Elon, later in the conference call, he signaled that he was going to, I don't want to say quit, but he signaled he's going to focus less on his Doge efforts while not exiting outright, and he's going to double his focus on Tesla. The market really liked that news. Look at Tesla pre-earnings here. They just reported a 71% decline in net income, and the stock is up 7.1% ahead of the opening bell. $255 for Tesla shares higher by 17 bucks. The market, well, let's just look at, like, say, a 1-year chart. Okay. In the context of the 1-year chart, that makes sense. Year to date, Tesla down 41%. So maybe Tesla shares sold off just a little too hard. But look, guys, look at the valuation here. What's the summary on Tesla? The PE is still 131. All right. How do you trade at a PE of 131 when your net income is falling 71% year over year? Tesla's not out of the woods here. This relief rally, we'll see how long it lasts. We'll see how much progress we make on the trade war. But for now, Tesla shareholders, enjoy your gains today. Meanwhile, Apple and Meta hit by a modest EU tech fines after Trump threats. Another cash grab by the European Union. Apple and Meta platforms were hit by relatively modest European Union fines totaling 700 million euros, $798 million. Yeah, a modest $750 million fine. Sure, what's a few hundred million among friends, right? The violations were for violating tough new antitrust rules for big tech following warnings of harsh retaliation by U.S. President Donald Trump. EU regulators levied penalties of 500 million euros against Apple and 200 million euros against Meta under its Digital Markets Act, which includes a list of do's and don'ts mainly aimed at Silicon Valley giants. Let's see. The European Commission said that Apple had failed to allow developers to link out from its App Store in order to make sales outside of the company's marketplace. And Meta's business model for ad-free services on Instagram and Facebook also fell foul of the tech law, which gives regulators fine powers up to 10% of a company's global annual revenue. We've seen this time and time again. It's like every couple of months, the gangsters from the EU come knocking on the door. They walk into the shop. They say it's time to pay your protection money. It'd be a shame if somebody would throw a brick through your window. We're going to need about $750 million this time. We'll see you next week. Family man like you. That's good. I like you. See you around. Yeah, apparently they send the Italians to do this. All right. Meanwhile, Boeing stock jumps as commercial airplane revenue surges and losses narrow. Now, this is interesting here because, this is good news for Boeing, but they're still losing money. Shares of Boeing climbed 3.6% in pre-market trading Wednesday after the aerospace and defense giant reported a first quarter loss that was less than half of what was expected as commercial airplane revenue surged. For the quarter ended March 31st, core per share losses narrowed to 49 cents from $1.13 in the same period a year ago and beat the average analyst estimate of $1.18 a share. Revenue jumped 17.7% to $19.5 billion. That's above the consensus of $19.38 billion. Commercial airplane revenue shot up 75% to $8.15 billion, while defense, space, and security revenue declined 9.4%. Total order backlog increased $545 billion from $521 in the previous quarter. Pretty good results from Boeing, but they're still losing money. At the very least, the worst appears to be behind them. But I would add, guys, this is the quarter ended March 31st. And Boeing is one of the main targets in the trade war. So the good news may not last. For now, Boeing shareholders are enjoying the good news, up 7% ahead of the opening bell here. Actually, the opening bell just rung up 6.75%. Here, let's refresh this and make sure we're getting this number right, shall we? Currently, Boeing stock is up 6.75%, $11 higher at $173.50. Meanwhile, we got at&t stock jumps after earnings. Why it may be winning customers from Verizon. at&t beat Wall Street's first quarter revenue targets on Wednesday as more customers than expected switched to its cell phone plans amid worries about the health of the U.S. economy. at&t said it had added 324,000 postpaid net phone subscribers over the quarter, beating the 303,000 estimate that analysts were forecasting. It could be that it's luring customers away from Verizon, which reported more postpaid subscriber losses than analysts were expecting yesterday, amid worries that President Trump's tariffs could weigh on the economy and drive up inflation. Yeah, there's the Trump goggles on this story. at&t is often associated with more budget-friendly plans compared with its rival. So the cost of inflation taking its toll on people. They're looking to save money, and that's got a lot of people canceling Verizon plans and jumping ship over to at&t. So Verizon's probably going to have to cut their rates here if they want to maintain these customers. AT&T gobbling up market share, and the stock is, actually the stock is not moving very much at all. 0.2% higher here, 27 points up at the open. Kind of interesting. AT&T was about 2.5% higher, but gave back those gains over the last couple of minutes. Keep an eye on that one here. Meanwhile, the housing market, guys, the 30-year mortgage rate in the United States increased to 6.9% for the week ended April 18th. That is up from 6.81% in the previous week. So this ruckus in the bond market that's happened over the last few weeks, it's taken interest rates for mortgages higher along with it. Currently 6.9% for a 30-year mortgage, and that is having a predictable impact on mortgage applications. Mortgage application volumes in the U.S. plunged by 12.7% from the previous week, ended April 18th. This is the sharpest decline since October of last year, extending an 8.5% slump from the previous week. Applications to refinance a home, which are more sensitive to short-term changes in interest rates, slumped by 20%. In turn, applications for a mortgage to buy a new home fell by 7%, despite evidence of higher inventory. That's worrying there, guys. A 7% decline in applications to get a mortgage. They're falling even as inventory rises. Less demand, more supply, lower prices. And I would add, guys, this is just applications for refis, applications for mortgages. Rejections for those things are also climbing. So there is trouble ahead in the housing market. Those housing bulls who have been gloating for years here, sooner or later, guys, reality is going to catch up with this housing market. Maybe that September cancellation of the FHA loan workouts that my friends Melody and John talked about, maybe that will be what pushes this market over the edge. Meanwhile, we got more layoff news this morning. Intel to announce plans this week to cut over 20% of staff. Tens of thousands of layoffs once again from Intel. They're supposed to be building factories in the United States. Instead, they're firing people. Intel is poised to announce plans this week to cut more than 20% of its staff, aiming to eliminate bureaucracy at the struggling chip maker, according to a person with knowledge of the matter. The move is part of a bid to streamline management and rebuild an engineering-driven culture, according to the person, who asked not to be identified because plans are private. It would be the first major restructuring under new CEO Lip Bhutan, who took the helm last month. The cutbacks follow an effort last year to slash about 15,000 jobs, a round of layoffs announced in August. Intel had 108,900 employees at the end of 2024, down from 124,800. So a 20% cut to the headcount at Intel, that would take them down to about, 88,000 employees now, another 20,000 or so layoffs coming over at Intel. Watch those jobs numbers, guys. The job market, it was never as strong as they've been telling us, but at the very least, it's been treading water, even though underemployed and, people working part-time for economic reasons, those are at ridiculous highs, as well as multiple job holders. But at the very least, people who are willing to work their hands to the bone have found jobs, and at least there's part-time lousy service work where you can do that. If we start to get these widespread layoffs, maybe even that goes away, and, well, that's just a whole other animal entirely. All right, one more. I figured you guys would enjoy this one today. WEF confirms investigation into claims against founder Schwab. Klaus Schwab, the nicest guy you ever did meet. Doesn't he seem like such a nice man when he's talking about how we will create a great reset and the young people will eat insects while I sail all over the world? Oh, yeah, Klaus. By the way, my Klaus Schwab impression is very, very tough on the larynx. Oh, wow, Klaus, you almost made me gag there. In a statement confirming a report by the Wall Street Journal, the WEF said its board of trustees unanimously supported the Audit and Risk Committee's decision to initiate an independent investigation following a whistleblower letter containing allegations against former chairman Klaus Schwab. The letter, said to have been sent by anonymous current and former WEF staff, included allegations that Klaus Schwab asked junior employees to withdraw thousands of dollars from ATMs on his behalf and used foreign funds to pay for private in-room massages, wink, wink, at hotels, wrote the Wall Street Journal, which said it had seen the letter and spoken with people familiar with the case. It also alleged that his wife Hilda scheduled token forum-funded meetings in order to justify luxury holiday travel at the organization's expense. Oh, okay. So, yeah, I want to go to Bali this weekend, so let's have a meeting in Bali that talks about how poor people are going to have to eat insects. And by the way, I would like a nice Wagyu filet while I'm there for dinner. And the letter reportedly raises concerns about how Schwab treated female employees and how his decades-long leadership allegedly allowed instances of sexual harassment and discriminatory behavior to go unchecked. Klaus, who did you piss off in the powers that be at the World Economic Forum? All of a sudden, all this stuff that, let's be honest, we all knew they've been doing this stuff all along. All of a sudden, an anonymous letter forces him to retire. Something's going on in the World Economic Forum. There's some infighting or something there. They are serving up Klaus to the woke mob, and they checked all the boxes, right? Misappropriation of funds, sexual harassment, mistreatment of female employees, discrimination, all the things that are like capital offenses in that crowd. All of a sudden, they are targeting Mr. Klaus, and you know what? It couldn't happen to a nicer guy, could it? So it's always fun to see the Weffers eating their own, isn't it? Little bit of World Economic Forum cannibalism. They must have run out of bugs because now they're eating each other. Ain't it great? I told you guys would like that one. Big Mouth Barry, thank you so much. As Mugatu once says, I feel like I'm taking crazy pills. Earnings stink, stocks go up. Please explain. Yeah, well, look, Tesla shareholders are notoriously bullish guys. They latch on to any good news. I really think what took Tesla higher yesterday, besides look 41% year-to-date decline, it was due for a bounce here. That being said, the earnings were even worse than we feared. I really think it was those statements by Musk that kind of sort of indicated he was going to step back from his Doge work and double his focus on Tesla. That's what they're really bullish about right now. That being said, I don't think that's going to be enough to fix the problem. Like, these people, they're burning the cars, all right? They're not just not buying them. They're not just saying agree to disagree. I respectfully do not agree with what Elon Musk's personal politics are. They're burning and blowing up and shooting at his dealerships. So I don't think a step back from Doge is going to be enough to reverse a communist angry mob, to be honest with you. And look, it was a terrible business decision, like completely alienating the people who made your company what it is. Which when Elon made his hard shift to the right, that's what he did. He totally alienated his base. Not a good business move. And forget the politics of it all. It was just a terrible business decision, and now they're paying for it. Tesla's going to get a bounce here. They're going to be another target for the trade war. So maybe the cooling rhetoric playing a role here. There's a couple of different reasons why the stock is higher. That being said, I don't think Tesla is out of the woods, not by a long shot. I think Tesla's valuation has a date with reality, and it's going to be a painful one for Tesla shareholders in the long run. Thank you, Big Mouth Barry, for supporting the channel, sir. Charles G says, can we not send markets higher, please? Can we just crash it another 50%? 50% might be a little bit much. But 50%, now you're talking more of a 1929 versus a 2008 kind of scenario. With this trade war and everything that's going on, are we going to get away with a March of 2020? Are we going to get away with a 2008? Or is this going to be a full-on 1929? I think that's kind of like the question here. We've already almost had a March of 2020, not quite as bad, but the pullback over the last couple of weeks was pretty violent. But my moderator, Mish, made a pretty good comment yesterday, in our morning phone call, and I saw a couple of other FinTwit accounts kind of echoing the same sentiment. It really looks like a controlled demolition where we issue some kind of like ridiculous statement with some ridiculous number attached to it. Market sells off. Then we engineer a rally by reversing that rhetoric, taking us back up a couple of thousand points. Then we send it back lower again, rinse, repeat, to take it down slowly, a little bit at a time, so as not to do everything so suddenly that you just break something. It's very possible that's what we're seeing with this seemingly bipolar rhetoric coming out of Washington. Maybe it's just a controlled demolition, and maybe that 50% number is where we're heading. Only time will tell. Thank you so much, Charles, for supporting the channel, sir. Harmon Air LLC says, updates on the tinfoil swag. Shall we don the tinfoil hat? Yes, we shall. No updates yet on the swag. I am working that angle, guys. Summer's coming, and I need to magnetize some chicks. I'm telling you, Harmonaire, you'll be fighting them off with a stick, brother. They just can't get enough of this thing. I'm telling you, we're trendsetting here. Thank you very much, Harmonaire LLC. Nothing says paying attention and up yours to the WEF, quite like the tinfoil hat. Armando Reyes says people are camping out and living in U-Haul trucks. Yeah, it really, that's the biggest crying shame about everything here. The destruction of the middle class, the loss of manufacturing, all the national security risks that come along with it, and the fact that we don't even know how many people. I've heard the estimates are over 1 million of people who are just living in vehicles, living in tents around the country at a time when supposedly it's the best economy ever. All right. I mean, the gaslighting from the financial press over the last few years, which is going away now that their guy's not in charge. I knew that was going to happen. But it really is a crying shame. And again, when financial experts talk about how crazy it is, oh my God, private equity funds would go bankrupt and banks would lose money and this institution and my stocks would go down and your 401k would go down if we're forcing companies to build factories in America and hire more expensive labor. Okay, those are all bad things. Those are all painful outcomes. But you know what? For the people living in tents, it's probably a pretty good outcome. For the middle class, for what's left of the middle class, it's probably a pretty good outcome. And one possibility, this trade war, it's being billed, it's being sold in the press as Trump versus the world or America versus China and everybody else. What it really is, what this trade war really is American companies versus what's left of the American middle class. All right. American companies will jump through any hoops, including Apple, emergency airlifting 60,000 tons of freaking iPhones from Bangladesh at the last minute in the middle of the night to avoid tariffs. The lengths they will go to avoid hiring American workers is amazing here. That story is not getting told. All right. About how our companies will do anything to avoid hiring us, but they still expect us to buy their crap. With what? Something to think about. I'd really like to see more companies saying, you know what? We think we're going to hire some Americans. We're going to build a factory here. Or, let's just wait until China invades Taiwan and all the things we're talking about how we can't live without now go away anyway. By the way, that's happening probably in the next 2 years. 2027, man. Everything I've read says 27 is when the Chinese are going to go. And do you think this trade war is bad? Wait until they decide to invade Taiwan and you can't get any of this stuff anyway. When that happens, you will wish Intel had built that factory. You will wish Levi's had started making their jeans in the U.S. because all that stuff's going to go away when that happens too. And then it won't be Trump versus the world. It would be, oh my God, who could have seen this coming? Thank you, Armando, for supporting the channel, sir. Pigo's Trading Desk says, I see a fictitious 1837 situation. Yellen coaching. I'm not familiar enough with the 1837 situation to comment on that, Pigo. I would love to. The fictitious, interesting, something fraudulent about it. And you're kind of teeing up my Yellen there, but I just don't know what happened in 1837. I've not studied that particular occasion, so I can't really comment on the 1837 situation there at all. But I would just like to remind everybody that I am the largest human unforced error in the history of finance, in that I largely presided at the Federal Reserve and at the U.S. Treasury over the destruction of U.S. manufacturing in the middle class. And now I call it a pipe dream that my life's work to destroy poor people might ever be reversed. Well, thank you, Secretary Yellen, for that unusual bout of honesty there. We appreciate your humbleness, and we appreciate the attrition that you're showing, and the acts of attrition that you're showing here. So it's never too late to turn over a new leaf, Janet. Maybe you could become a hero of the working man. I don't know. Thank you, Pigo. Sorry, brother, I just don't know enough about 1837 to comment one way or another. Oh, here he goes. Keep it simple. It's just theater. Top 1% benefit. How many situations could just easily be described with that sentence? How many of these silly social issues that we fight about and the manufactured outrage and stupid political posturing could just be replaced with the top 1% benefit? Really? It would really shorten the news cycle. These live streams would be a lot shorter, wouldn't they? It'd be like, good morning, all you magnificent melon heads of the world. Like and subscribe, the top 1% benefit. I love you, mom and dad. Live small, dream big. That would be the live streams. It'd certainly be more concise and save a lot of time, wouldn't it? Thank you, Pigo, for supporting the channel, sir. Richard Bell says mega plants being built in the middle of nowhere. Mega plants for what? I keep hearing about all these plans, all these companies. We're going to invest in American infrastructure. Project Stargate. We're what Masa-san said, $1 trillion we're going to spend on data center. Where is it? Where are they building this stuff besides nowhere? All right, the data centers, yeah, they're building the data centers because, we got to burn a whole bunch of energy to get our chatbots to tell us to eat bugs and jump off the Golden Gate Bridge or whatever else they're doing this week. That being said, the manufacturing plants, I'm just not seeing it. No companies have said, you know what, we see this trade war. We see the writing on the wall. We know China's going to move on Taiwan. And when that happens, we want our business to be stable. And so we're going to invest in the U.S. We're going to invest in American manufacturing. Nobody's saying that. Maybe a few car companies are, but I'm not hearing it. Not one. Who wants to be first? I don't know. But Wall Street will probably punish them for it. Thank you, Richard Bell, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Thank you so much for the super chats and the support of the channel, everybody, as well as you, my magnanimous Melonheads on YouTube and Patreon. You guys rock. Thank you so much. Links down below to all that good stuff, should you feel so inclined, as well as links to Spotify, where the show will be uploaded momentarily. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big. Oh, and don't forget that like and subscribe on the way out, too.